Hello, my name is Eddie Tofpik. I'm Head of Technical Analysis and Senior Markets Analyst at ADM Investor Services International Limited. And here is your weekly technical analysis of LME 3-month copper, aluminium and lead.
LME 3-month copper. There are a number of patterns that have made themselves known here on this daily chart over the last few weeks. Some I have previously mentioned, some have recently appeared, and some, well, they became evident when I started looking at publishing my longer term views on LME copper back at the start of January. I'll start with the patterns I've already highlighted, and for this I'll start with the October to November 2024 small bearish descending scallop pattern. This gave a primary target down in the 92.02 zone, which was achieved, and a secondary harder to reach target X down in the 87.50 zone around the lows of August 2024 and just underneath the dark blue neckline extension, currently 8800 of the upper trend line of the June to August 2023 ascending triangle pattern. Target X was in the 87.50 zone, and the low in late December 2024 was 87.57. Thus, it was close enough for me to call it reached, and I will retire it after this commentary. Now, in the case of not seeing the wood for the tree situation for me, it only became evident to me when looking at the longer term charts that there was a shallow July 2022 to October 2023 bullish shift pitchfork, which is highlighted in bright red on my daily chart. The current one, the lower time for that is at 87.72, and which reinforces the support from the previous lows of August 2024 and the dark blue neckline extension. At the same time, some resistances I often previously highlighted, the oft-mentioned congestion area between 93.95 to 96.06, and below that the small congestion band of 86.65 to 86.86. These two, well, they have capped and held up the market respectively, much as they did and had done last year. Now, a new or newish resistance has made itself more obvious since December, and that is the mauve highlighted medium moving average, currently at 91.60, which has acted as a cap, especially on a closing basis, back in December last year, as well as late January this year. Thus, all this has led to what we now have a sideways market within a wide range of about 8800 up to about 9320. So what should we look out for in the future? Well, I'd keep an eye on the three 50% Fibonacci lines that populate the nearby market. The nearest is the July 22 to May 23 move at 90.29. Then above, the October 23 to May 24 move at 94.80. That sits in with the overhead congestion between 93.95 to 96.06. And finally below the market, the October 2020 to May 23 move at 86.86, which makes up a small support zone of 86.65 to 86.86. LME 3-month aluminium. Much as LME copper, there are a number of patterns here that have made themselves known on this daily chart over the last few weeks. Some I've previously mentioned, some have recently appeared, and some, well, they became evident when I started looking at publishing my longer term views on LME aluminium back at the start of January. I'll start with the patterns I have already highlighted, and for this I'll start with the ones I previously mentioned, notably the bright red tines of the mid-December 2023 to late July this year bullish Andrews pitchfork. Or late July last year, I should say, my apologies. We are at this time playing with the middle time, currently at 24.99. We also had for the same time period a bright red shallow bullish shift pitchfork. We also have just below and breached but possibly repaired a purple lower time, currently at 25.93 of the bullish Andrews pitchfork for the same move. Add to this, below we have the support breached but seemingly also repaired of the flatlining gold long moving average, currently at 25.38. This had been previously penetrated in early January and back between July to September last year, but has shown some resilience after a fashion. Then there are the new patterns that have since my last commentary shown themselves, and there are two I'd like to look at specifically. The first is the less obvious one, the dark blue lower time, currently at 23.82 of the long-term 2015 to 2020 bullish Andrews pitchfork. This is one to keep, as the name suggests, a longer term eye on, as it sits just above some significant dynamic congestion between about 23.45 to 23.55. The other is a more recent pattern since November last year to January this year, and this is for a change actually, a bearish pattern. The November 2024 to January 2025 bright green bearish Andrews pitchfork. Prices are at this time in between the overhead upper time, currently at 26.64, and the middle time below, currently at 25.32. This pattern seems to have some very recent merit, but just be watchful of the test of the upper time, especially after yesterday's combined key reversal up and bullish engulfing pattern. However, should prices decide to follow this recent bearish pattern lower, then please also keep an eye on the previously highlighted 50% Fibonacci line below of the December 23 to May 24 move at 24.54. As I said 7 weeks ago, and I quote, "I'm not sure how good that will be, and we next have support in the 23.40 to 23.87 zone with two necklines running through there." End of quote. The 23.40 to 23.87 zone now equates, when it's finished, as it has been, to the previously mentioned 23.45 to 23.55 zone. LME 3-month lead. 12 weeks ago I detailed a number of supports below the market at the time. These are still very significant now, and I quote, "Some of the supports below, some of them well below, Fibonacci-based congestion otherwise between 1994 to 2002, followed by the June 23 low at 1976, which looked, how shall I put this, less interesting. Then the 2024 low in August at 1917, which I suspect is a function of the nearby 2021 low at 1908. There's also a neckline extension, that's currently at 1918, of the July 23 to February 2024 head and shoulders continuation pattern. The reason I mention these supports below is that they contributed in eroding the decline we saw in early to mid-September, enough that it was stopped and turned back upwards." End of quote. These supports also eroded and turned the market back up in the middle of November last year, with prices peaking just under the long moving average, currently at 20.86. This pullback up and subsequent decline affected what I had set out as a possibility for the move lower in November last year, and I quote, "That is not all, as if we do get down there and continue, then please be on the watch out for 2 bearish and 1 bullish possibilities. The action from August to date could then be seen as a possible large bearish cat's ears pattern, or an even larger July to date, that's July last year today, July to date bearish halfway hesitation. Alternatively, it could then be an opportunity for a mid-July to date triple bottom." End of quote. In the end, the idea of the bearish cat's ears pattern or a triple bottom has come and passed and really not happened. Last time I was on the verge of dismissing such notations, but I will instead extend the idea such that instead of the earlier ones, look to the action since August last year becoming a possible bearish head and shoulders continuation pattern for a bright red neckline constantly being tested, currently at 1951, or the action since early November 2024 today being a possible descending triangle pattern for purple upper downtrend, currently at 2047, and the bright red neckline previously mentioned being the lower trend line. Now add to all this the slowly declining dark blue neckline extension, currently at 1918, of the July 23 to February 24 head and shoulders continuation pattern. As you can see, we have an interesting mix that is gradually getting narrower and narrower each day. As I said 12 weeks ago, and I quote, "I suspect a lot will depend on what the market does at the neckline extension below should we get down there." End of quote. This leads me to my final point, and it is to me the most important point of all. At the end of December last year, we saw that 2024 had created a very rare pattern, an annual key reversal down here. All things, and I mean all things for going forward this year, should be seen in the shadow of that pattern, as I consider it the most important of all the points I have raised here today.
Thank you for listening and watching this broadcast. This weekly broadcast gives the essential market patterns and consequences. Please be aware of the risk disclaimer posted both at the front and at the back of this broadcast. The copyright is Eddie Tofpik and ADM Investor Services International Limited. And here comes the final important bit.